So what should you be doing? Should you be buying the dip? Should you be waiting by and, waiting for the next triggers? Well, we have Amit Khurana of Dolat Capital joining in to weigh in on the markets as 2024 kicks off. Amit, good morning. Thank you for joining in. Season's greetings, and first of all, wish you a very, very happy new year. So there's been plenty of drama, right? The end of the year saw drama because we had that gush of foreign liquidity coming in at a time that's usually very quiet. And now the year starts off with a lot of volatility. What do you make of things?
Well, yeah, I think the beauty of the last 4 weeks of the last calendar year was that all the returns for the year that we were tom-tomming about essentially happened in 6 weeks. So if you look at the market, October 23, we were at about 5% ballpark. And suddenly that last 7-8 weeks gave you that push. The Fed pivot was a big trigger. And then, of course, the state elections, which essentially sort of gave a confidence that we're going to see a continuation of the incumbent government for the third term, hopefully. But I think very skewed returns, but the tailwinds are now much in favor. And I guess the Goldilocks is what we called out for after the Q2 earnings. And that I think will sustain for the first half calendar year, so to say. But temper your expectations that 20% repeat this year will be quite a stiff task because the earnings have to deliver now.
Okay, Amit, thanks a lot for joining us. So, you said the Goldilocks kind of situation could persist for at least the first half. Do you also think that considering the kind of run-up that we've already seen, towards the end of last year, do you think that volatility is going to be much higher this year? And also, how are you positioned as we get into this year? Are you fully invested? Are you sitting on, cash that you feel like you would deploy when you do get a dip?
Well, yeah. So from a volatility perspective, we've seen the India volatility index actually breaking out of a very long muted trend. So while a bit of volatility is healthy because it gives play both sides of the fence, but I would suspect that as we go along the year, there are a lot of events, both domestic and global, which could keep the volatility elevated. But I don't think it's such a concern as of now to our view for the next 6 to 12 months. As for the positioning, see, we're invested from a 12 to 18 months perspective. We believe that the cycle is turning much better for the earnings at large. The macro earnings will trail at between 15 to 18%. The large caps, which were at a pretty discounted performance versus the mid and the small, will eventually do a call, which will do a catch up for the first half. That's the big directional view we are forming. As for the near term, I would probably even not rule out trimming some of the positions which have done pretty well. For example, cement, where the expectations are now running pretty aggressive, and we believe there is a risk to the market consensus. So market is looking at double-digit volume growth. We believe 7-8% might play out, and therefore it gives you some bit of a cool off or some bit of profit booking which may play out, which again we will look to enter at those lower levels. So basically, if I were to define our status, I would probably call it as a tempered bull. But be very, very cautious on some of the names in mid and small cap because they've really started discounting FY26 and 27. I mean, some of the models are talking about that. So probably keep your hands off that. Let a dose of realism set in. Some reality checks will help, at least for the first quarter on mid and small cap.
It's after a very long time that I've brought out my losers list. Usually you don't end up looking at it. It's been that kind of a market. You only look at mid-cap gainers and high flyers, right? Today I've opened my losers list just to see, because the mid-cap market is actually looking at a cut of almost a percent. Some names that come up, Macrotech developers, some of the property names. Macrotech is down, even Uptown, Bombay-based real estate company, 4% lower over there. Then you have some of the PSU names like NLC India, for instance, down about 4-5% as well. I mean, speaking of PSUs, I guess that's also a question that people will have. Every time you get a shakeout like this, that's one question that people will wonder. I'm sitting on a gain of 100% on my PSU stock. Should I lighten, sell, stay invested, buy more? What would your advice be?
Well, very difficult to make generic calls, honestly, Surabhi. I think what we are backing up is PSU banks because we believe a continuation of the current government will give the much needed fillip in terms of capital and ability to lend to these franchises. The books are more or less clean. They have not really gone aggressive on lending in the last 3-4 odd years. So there is a bit of a cushion that you have even from the valuation perspective on PSU banks. But some of the other sectors, especially led by PSUs, there is lack of comfort, let me put it that way, at these valuations. The story remains intact, but the valuations have gone a little far ahead. And therefore, as I said, temper your expectations. Tactically, one can take some money off the table. Let's see how things work out. And remember, this is all built on a Goldilocks scenario that we believe is going to be the case. But just in case the probabilities shift towards a rate cut, which does not happen in March or April, and it shifts towards July or August, then you could have some risk sitting on the portfolio. So we've made enough money over the last 3-4 months. It's better to be realistic in terms of setting our expectations.
Okay, that is on the PSU space. Amit, another space I want to ask you about is this entire new age set of companies. I don't know if you'll comment on individual names, but, stocks like Zomato, there seems to be a very clear sort of taking every opportunity that you can to sort of increase, the fee. For example, on 31st, they had a 5 rupee increase on the platform fee. So a very clear move to that profitability thing is, and that seems to be, the word a lot of brokerages are sort of agreeing with as well. Do you think that these companies now are ripe for investment? Would you look at a Zomato, Paytm, Nykaa, any of those which the street had sort of not been too happy about for a while?
Yeah, and there were valid reasons for it. When we cover all these stocks and we have our strong opinions both sides of the fence. For example, we backed up Paytm and we still believe there is a path to profitability, which will eventually play out over the next 2 to 3 years. There have been some concerns on Zomato in particular because the expansion on the network has been a little less and therefore the cost measures have helped them to boost the profitability. And if the ability to monetize the platform turns out to be better, then we are more than happy to revisit our opinion. We also cover PB FinTech for that matter, which we like as a very deep domain-specific play on financialization story in India. So there are individual plays that we like and dislike, but yes, I think the clear path to profitability, the realization on the part of these managements that as they scale up these businesses over the next 2, 3, 4 years, having got listed on the public markets is very evident. Versus the private equities, which can take a 1 quarter, 1 year drawdowns on these models. The public markets are very different, and I think these models are getting realigned to address those needs, and therefore there'll be enough opportunities to play around those.
Okay, Amit, since you are talking some stocks, as we wind up, leave us with some of your top high conviction ideas or areas where you are really looking at investment from at least a medium-term perspective. I'm not saying gains the next one week or 1 month, but say your top conviction bets for 2024. Any 1 or 2 names you'd like to leave us with?
So we've backed up IndiaMart. The earnings have been slightly muted of late, so that's one idea that we believe will start delivering much better growth numbers, and hopefully the market will start giving it better rating over the next 18 to 24 months. There has been a lot of correction done on the core business. The price hikes that they have taken for the subscriptions will eventually flow through the P&L. The subscriber additions have been a little muted, but we believe eventually this will start turning around and start showing a better monetization for the franchise. That's one name that I want to leave with. And second, which we have initiated, is on gold finances, where we are backing up Muthoot Finance as our preferred pick. As the gold prices are on a strong roll, the LTV ratios start becoming favorable, and obviously as those become into the NIMs being much stronger. And also, I think the franchise has displayed much better, ability to face competitive pressures versus some of the other small and mid-sized players that we also cover. So we believe gold finances will be the one to watch out for the next 12 to 18 months yet again.
Okay, those are some interesting ideas. Amit, thanks a lot for joining us right at the start of the year and taking us through some of those fresh ideas. We do hope to have you back on soon again. But with that, it is time for a short break. On the other